Hey everyone, this is Jordan, and this video is being recorded on the evening of Sunday, February 19th, 2023. Thank you so much for joining me. In this video, I'm going to discuss the weekly outlook for gold and silver, which I think is going to be a positive and bullish outlook. But first things first, if you haven't already, please subscribe to the channel. I would really appreciate it. Thank you so much. Now, to the analysis. Here we have the daily candle charts for gold at the top, silver at the bottom. And I like stock charts and how you can view a chart over a long period of time, but then you have this zoom in feature and you see that on the right edge of these charts. And so in the short term sense, I mean, if we're just doing daily analysis of the candles, basically the gold and silver closed out the week Thursday and Friday with two bullish hammers. Both hammers were white. That's more significant. If you look at Friday, you had an even stronger hammer. After Thursday, the market closed higher than where it opened. So these are all good signs, and we can see, just zooming further out, you look at gold, and we noted how that 1835 area, I mean, that would be the first target for gold. And if you look at the last 2 days, you can see how the wicks, you can see Thursday, gold came down below 1840. Friday, it came down to a low of even 1828. So, but if you're looking at closing prices, it'll better reflect that 1835 is going to hold as support, at least here in the very short term. So we'll see how gold does at that point. There's going to be quite a bit of resistance around 1890 to 1900. So gold closed at 1850. Let's see if gold can rally up to 1890, maybe even 1900. I mean, that would be more positive than if it fizzled out before it got to 1890. And so looking further out, I do think gold is going to test 1800 at some point. Here we see the lateral support at around 1780. The 200-day moving average, I believe, is at, let me zoom in for a second, 1783. So, and I've talked about the other moving averages, the 400-day, the 40-month moving average. They're all coming in around 1800. So that's going to be, we'll talk about that over the weeks and months ahead. If gold indeed does come to test 1800, that's going to be significant. Now, looking at silver, you got the bullish hammers there. Silver also came down to the very low 21s. Nice bounce off the 200-day moving average. But, here's an educational piece. What really matters with moving averages is the slope of the moving average. And so looking at gold, what makes it really interesting is gold's flattening out the 200-day, and it's going to try and turn up, over the next couple months. And so we'll see if gold is able to stabilize, at 1800 and build a bit of a base there while the moving average slowly turns up. That would be bullish. Silver, on the other hand, the moving average is still descending. It's sloping down. And so it would be way more significant, of course, if silver hit that moving average, formed a bullish hammer, but the moving average was sloping higher. So the fact that it's sloping lower, maybe it's immediately significant over the next couple days, but, further out, it's really too early to say that's quite significant. And so, looking at where silver could rally to, if we do see a rally take hold, the resistance, looking at the daily chart, it's going to come in around 2240, 2250, which that's not a lot of upside. So we'll see if silver is able to make a bigger rally than that, and perhaps get into the higher 22s or even 23. But so the mid 24s is really the minimum upside target at this point. Now, looking at the stocks, obviously the stocks can lead. I mean, at key turning points, and we can see here in the last couple of days. I mean, you had strong. If you're looking at GDX, I'm just zooming in on my own. we can see GDX. That's two strong bullish hammers. GDXJ had a very strong bullish hammer on Friday. And SILJ, the silver stocks, 3 bullish hammers in a row. So you have that. And if you look at GDX and GDXJ, like silver, they bottomed. They're bouncing at the 200-day moving average. However, the 200-day, the slope of those moving averages still sloping down, although it looks like they could go flat over the coming weeks. And so SILJ, it looks like it's made a short-term bottom below the 200-day moving average. So we're seeing more strength in the gold miners. As far as what kind of upside here we can see for GDX and GDXJ, for GDX, I would look at 30. You have stiff resistance in a very short-term sense at 30 to 31. So I would be surprised if GDX was able to rally above 31 and fill that gap. So we would hope that we at least see GDX get close to 30. With respect to GDXJ, I mean, that's a ways to go up to filling that gap. So if you look at the action after GDXJ gap down, that's going to be short-term resistance. So we're looking at, call it 36.50. That's a minimum. That's about $2 higher, and then 37.50 just to round to those numbers. Worst case, maybe GDXJ fizzles out around 36 or the low 36, but that would be my hope on this rally. It gets to 36.50. Climbs a little bit more than that. And same thing with GDX. Doesn't necessarily have to fill the gap, but if it came up to 30.50 or so, I mean, that would be a nice rebound here in the very short term. As for SILJ, that resistance comes into play right around, we're looking at 10 and a half or so, 10.50. So that's, what is that, 5%? And then you have resistance up at 10.80. So those are the levels I would look at. But, bottom line, we've had a leg down. I'm not sure if the correction is over. Could be wrong about that. I mean, the larger correction, typically in corrections, you tend to see 3 legs. You see a down, up, down, and that can be the correction. That is one aspect of Elliott wave I do like. And, perhaps this was the first wave down, and then we could see a rally into March potentially, and then maybe we get another leg down, and so the third leg down oftentimes in a correction is the worst, but we'll worry about that if it comes to pass. So bottom line here is the path of least resistance in the immediate coming days and next week or so should be higher for precious metals, and hopefully we'll get a good rally here, and it'll make the monthly charts look better in February, because so far they look pretty nasty. So hopefully we can erase some of that damage as we go into March. Thanks everybody for tuning in, and I'll see you again in the next video.